Hi everyone, Martin Bamford here, and this is your Money News Fix. 5 personal finance stories that are rocking the world of money this week. Everything you need to know in just a few minutes. Here we go. More than 1 million people in the UK will start paying income tax for the first time in the next 5 years. In the budget, Chancellor Rishi Sunak announced the freezing of the personal allowance for income tax, which will remain at £12,570 until 2026. By freezing this allowance, wage inflation will ensure that more people pay income tax at 20%. Also frozen for 5 years from April is the higher rate income tax threshold set at £50,270. Freezing this threshold means that even more people will pay high rate income tax at 40% over the coming years. Freezing thresholds for income tax, the capital gains tax annual exemption, inheritance tax nil rate bans, and the pensions lifetime allowance were all stealth tax increases announced in the budget. It's also a move known as fiscal drag. According to the Office for Budget Responsibility, this fiscal drag, when the cost of living is taken into account, will effectively restore the income tax personal allowance to its level back in 2014-15 by the time we get to 2025-26. Compared to the tax it would have raised by keeping the thresholds in line with inflation, the move will add £8 billion a year to the Treasury's tax take. With a return to the office on the cards for later this year, new research has found that we have saved an average of £1,386 by not commuting since the start of the pandemic. These pandemic savings of £126 a month were calculated by Money Supermarket, and they could be extended by a further £378 during March, April and May. With as many as half of all businesses considering a flexible working option post-lockdown, by working from home 2 days a week, it should be possible to save as much as £48 a month in the future. According to the survey, 42% of us are planning to reduce the cost of travel as the economy starts to reopen, with 65% of those with cost reduction plans saying they will go into the office for fewer days a week, and 31% planning to walk for more of their journey. 16% said they will cycle to work to cut costs, and 11% plan to use an e-scooter for part of their journey. Emma Harvey, money expert at Money Supermarkets, said, while working from home comes with its own pressures, many office workers have enjoyed substantial reductions in their monthly commuting costs and on associated spending like lunch. New analysis has found that bricklayers, restaurant staff, IT engineers and air travel assistants are most likely to have experienced a pay cut due to the pandemic. The data from the Office for National Statistics found that these professions are among non-key workers who are least likely to be able to work from home. The ONS classes these jobs as high vulnerability. According to the ONS, 32.4% of UK employees fall into this high vulnerability category and were more likely to have experienced a reduction in either working hours or pay during the pandemic. 53% of employees who were furloughed last April worked in high vulnerability jobs. The ONS said jobs most vulnerable to reduced hours or pay during the coronavirus COVID-19 pandemic had lower average wages compared with other occupations. The analysis found that occupations in the high vulnerability jobs category represented 88% of jobs with a median hourly wage below £9.12 an hour. That's the threshold for low pay. As many as 200,000 women could receive a payout averaging £13,500 as a top-up to underpaid state pensions. The Department for Work and Pensions is currently investigating the underpayment of state pensions for women who should have received an automatic top-up based on their husband's national insurance record. The issue dates back to 1992 and includes certain married women, widows and over 80s who started claiming their state pension before April 2016. According to the DWP, the cost of rectifying these shortfalls could be around £2.7 billion. Old state pension rules allowed married women who had an insufficient national insurance record in their own right to claim a 60% basic state pension when their husband reached his state pension age, assuming he had a sufficient national insurance credit. Some of these increases were not automatically applied. Speaking to the BBC, a spokesman for the DWP said, "The action we are taking now will correct the historical underpayments that have been made by successive governments, and anyone impacted will be contacted by us to ensure they receive all that they are owed." The limit for contactless card payments is going up later this year from its current level of £45 to a new maximum of £100 per transaction. The Treasury confirmed the increase less than a year after the maximum was raised from just £30. stores. However, businesses will still be able to impose a lower minimum on contactless card transactions. Contactless card payments have risen in popularity in recent years, made even more popular during the pandemic as use of cash has continued its decline. The £45 current limit was rushed through last April towards the start of the pandemic in an effort to protect shop workers and shoppers. Chancellor Rishi Sunak said, as we begin to open the UK economy and people return to the high street, the contactless limit increase will make it easier than ever before for people to pay for their shopping, providing a welcome boost to retail that will protect jobs and drive growth. That was your Money News Fix. Don't forget to like, share, comment and subscribe. I'm Martin Bamford, and remember, when it comes to your money, the more you know, the faster it can grow.